Exercise 11. Examine the following transactions and identify those that create revenues for Thomas Services, a company owned by Brina Thomas, and we can select all that apply. So let's remember that we record revenue at the time we do the work. That's the revenue recognition principle. The first one, Brina Thomas invests $39,350 cash in the company. This transaction increases both assets and equity, but the growth in equity is a result of the transaction with the owner personally. This is not a revenue. The next transaction, the company provided $2,300 of services on credit. Well, we've done the work, so we're going to record the revenue. In the next transaction, the company provided services to a client and immediately received $875 cash. Again, we've done the work, so we'll record the revenue. Then the company received $3,500 in cash from a client in partial payment of an account receivable. We haven't done any more work, so we're not going to record the revenue. The revenue was recorded previously at the time we did the work. This transaction increases one asset, cash, and decreases another asset, accounts receivable, but leaves equity unchanged. And finally, the company borrowed $120,000 in cash from the bank by signing a promissory note. This transaction increases both assets and liabilities, but does not affect equity. We haven't done any work, so we won't record any revenue. We're then asked to prepare general journal entries to record these transactions. The first one, the asset that we receive, is accounts receivable. We debit accounts receivable for $2,300 and credit services revenue. We'll also prepare a journal entry to record the receipt of the $875 in cash. We debit cash for $875 and credit services revenue. It's important to see the similarities between these two journal entries. A revenue results in an inflow of net assets. In the first journal entry, the asset flowing into the company is accounts receivable, and in the second journal entry, it's cash. In both cases, we've done the work, we've recorded the revenue, and the inflow of an asset.